This has been a painful period in the stock market, in the crypto market, in the job market, in pretty much any aspect of financial or professional life. My portfolio is down $15,000 or something like that. The stock market has had its worst first half in the last, I think, more than a decade, maybe even 20 years or so. Crypto markets are down, 50% plus. There's no victory laps right now. This video is not about victory laps, but I want to share two things that you can do to immediately improve your mental health, but also your stock market and crypto market returns. And they're really, really simple. The first thing is to stop looking at the daily news headlines. And the second is to extend your time horizon. Why should we stop looking at the daily news headlines? Well, you hear the term, if it bleeds, it leads. This is really just in general, but especially with financial news. The big media sites are all incentivized to get clicks, sell advertisements, get subscriptions, whatever. I'm trying to get more people to watch my YouTube videos. So, this goes into it, right? And what gets more people to click on things and watch things and pay for things than anything else is negativity and negative headlines. And so that's what you're going to see no matter what when you look at the headlines every day. It's important to be realistic, but in my opinion, it's also important to keep a clear mind and keep a long-term focus and not let all of this negativity scare us away from what historically has been the best time to be investing, to start investing, to build investments. That's it's after 10% drops in the market, or 15% or 20%. After big drawdowns is the time to be investing, not the time to be running away from the market. My fear is that by paying attention to the headlines right now, we get scared away from the market. I'm not letting that happen to me. Also, when things are great, and I made this mistake, and we should all be aware of this, when things are great and everything's positive and we see 300 SPACs coming public in a matter of 6 months and there's just excitement and nothing could go wrong, that's also an indication that, hey, let's temper our expectations here. So file that one in lessons learned right through 20 and really 2021. The second thing, extend your time horizon. I'm going to share some data that shows some of the best returning stocks over time, what their drawdowns have been, and how by extending your timeline, even if you're just invested in the S&P 500, you are basically guaranteeing making money in the stock market if your time horizon is long enough. And so when we think about extending our time horizon, that's extending the expectations that we have for returns when we might need the money, extending our timeline by spending less and saving more. These are all ways we can extend our timeline. If you invest with that mindset, I think we're going to own more sustainable, higher quality companies. So that's a good thing. And we're going to hold them longer, which tends to be the best way to improve our returns if we look at the historical data from the stock market. Appreciate you. Keep your heads about you. Stay positive. There's a lot of negativity out there.